Welcome to Masters of Risk, the podcast where we uncover what is top of mind for business leaders today. I'm Yashi Yadav, and I will be your host every month. Let's get started. Hi, everyone, and welcome to our next episode of Masters of Risk, a podcast by S&P Global Market Intelligence. My name is Yashi Yadav, and today joining me is Matt Reilly, who is the head of insurance solutions at Conning. Really excited to have you on today, Matt. How are you?
Hey, Yashi, I'm great. How are you doing?
Not too bad. It's a Friday, so can't complain. We're in the post-Labor Day part of September, so the weather's starting to cool down. Really enjoying it. But just to kick things off, I guess I'd love to hear a little bit more about your background and the work that you're currently doing at Conning, along with a little bit of background on the firm, I think, just to contextualize the conversation that we're going to have today.
Sure. So maybe I'll start. I'll start backwards, and I'll start on myself, and then we'll get to Conning. So I've been working in the insurance asset management for industry my entire career for third-party asset managers, and so what that means is I work for an investment management firm and have serving the needs of insurance companies. And really, it was completely by chance. So I always knew I was interested in finance and particularly the capital markets rather than, I'd say, more of the actuarial or accounting types of fields. Growing up in the Hartford area, you're heavily exposed to the insurance industry. And it was something that I wasn't all that interested in, but I kind of ended up at this unique intersection of working inside of investments and capital markets, but doing it very much with a focus on insurers. And have been very fortunate to be able to turn that into a full-time career here. And my role at Conning currently is I'm our head of insurance solutions. And so Conning is an investment management firm globally that's really focused on partnering with institutions and primarily insurance companies on solving their investment challenges and needs. So we have a wide variety of different investment strategies and capabilities. And we primarily manage general account assets for both property and casualty and life and health insurance companies globally. My team specifically really works with insurers on helping them to think about their investment strategy and how to best reflect the unique needs of their liabilities, their unique regulatory and rating agency challenges within their overall investment strategy. So we try to customize and design things that are going to work for insurers based on not just their own preferences, but also based off of the business and their financial condition.
Got it. That's really interesting, Matt. And I guess something that I'd be curious to understand a bit more on is, given your experience in the industry, you've been here for the last decade, have you seen a change in the types of strategies that you or the way that you think about executing on certain investment strategies in the insurance space, say from 5 or 6 years ago compared to now, given kind of the increased volatility in the market? Kind of what comes to mind from that perspective?
Yeah, it's a really good question. So thinking back, if you step back towards, really the past decade, and even going back, 20 years, insurers were really in this one-way trend when you're thinking about their investment strategy of lower and persistently low interest rates. Little
Right.
bits and spikes of higher interest rates and opportunities that may be presented, but over the longer term, it was kind of a one-way trend. And that really manifested itself in pressure that persisted on both the top line for insurers in terms of what that meant for their investment income, as well as the opportunity for them to, limited opportunities for them to maintain or increase their book yield. So insurers in that environment, there was a couple of things that came out of that weren't all that bad. The first is insurers, in order to try to maintain or increase investment income, really began to expand their risk tolerance. Um, and look outside of sectors that they might have considered the norm historically for their portfolios. And I can touch more on some of those details. And then now in this period of time, what we've seen, even in a higher interest rate environment that we've been experiencing, since the lows coming out of COVID, we've continued to see insurers with an increased risk appetite in terms of what they're considering for
Mhm.
their portfolios and the ability that they're able to take on different types of well compensated risks to help drive their investment performance.
Got it. Now, given the fact that they sort of have an increased risk appetite now, which is really interesting, are there any specific trends that you're noticing in the conversations that you're having with your clients about um, how to appropriately sort of measure and manage that risk so it's not resulting in excess losses or hurting the business as opposed to sort of helping it, because a healthy amount of risk is good because it converts into opportunity, but take on too much and it can kind of have a negative impact.
Yeah, it's a really great question, and I think stepping back. At the end of the day, our firm and what we're trying to do is we're investment professionals, and really investing is about risk taking and finding risks that you feel as if you're well compensated for, and that
Mhm.
makes sense given what you're trying to achieve with a given portfolio. So really focusing on what the objectives are at the end of the day. Um, the way the one of the things that we've seen is an increased interest in understanding how different investment strategies mix with the rest of an enterprise's business. So when we think about the portfolio, we're not just thinking about, okay, how does your investment performance, move over a certain period of time. We're really trying to think about how that matches with more broadly the risk that an insurer is taking. So if you were to take say a property insurer who's writing risks, say in the southeastern part of the United States, those liabilities typically are going to be a shorter duration liability, and there might be a lot of
Mhm.
exposure to, say, hurricanes or other types of natural catastrophes that might affect the profitability of that business. And that volatility, as well as the overall liability profile, really should affect the types of risks that you feel comfortable taking on the investment side. And so we've had, I'd say, an increased interest from organizations that are smaller as well as those that are quite large in terms of trying to understand and utilize what we think are some unique ways to approach thinking about risk in a holistic fashion. And so investment risk is one thing, but then if you think about it, another risk that an insurance company is undertaking is the risk that they're not able to meet those obligations that they've made to policyholders. So if
Right.
you're writing an annuity and you're guaranteeing a certain credit rate for a certain period of time, yes, one risk could be that your investments underperform what your expectations were when you initially wrote that policy. But another risk is that
Mhm.
you don't meet and take enough risk or earn enough income to support those guarantees that you've provided. And then all of a sudden you come into a situation in which you might have reduced capital, and that can lead to very negative consequences. So that's a lot of what we're doing. We're trying to put into perspective not just the investment risks that an organization might be taking, but how those interact with the other risks and the guarantees that they might be providing, and really what's inherent in the business of writing insurance.
Yeah, no, that definitely, I think, clarifies a few things and makes a lot of sense. And you actually mentioned something that I was going to ask. So, in terms of your client profile, I was curious if you were focused on a specific segment of the insurance market. Kind of sounds like you're dealing with small, medium, and larger enterprises. Are there any nuances, or I guess, are there different types of challenges that an insurance firm may come up with if it's, say, smaller versus a much larger firm? And how does conning kind of think about that?
Yeah, those are really, it's a really great question. So yeah, we work with organizations, I would say, that vary both in terms of the risks that they're undertaking, so across different industries,
Mhm.
as well as the size of the organization, and they each have different, pros and cons associated with them. So one, I think just having that variety of clients gives us a great view into not just what one particular segment of the market is doing, but we're engaged with a lot of companies in a lot of different ways. And just understanding where different organizations are and having that view helps to inform us in terms of how we think about problems. It also provides for us as an organization a lens in which we're solving a lot of different and distinct problems, and we're not trying to do so in a one size fits all type of way. We want to have a wide variety of tools that we can apply to each of the specific problems that we're engaging in. And so some of those might be specific investment strategies. Some of those might be ways that you might customize a specific strategy. Or some of those could be different ways that we're measuring risk and helping companies to understand risks. So that way they might want to, we can have a good conversation about if they're taking on the appropriate level of risk, or if maybe, it might be inappropriate or just different than what they initially thought it was. So I think there's that. The other aspect that is really unique is, when we're working with smaller and medium-sized organizations, often those are firms that are relying on us as conning effectively to act as an outsourced CIO for them, and to provide a lot more oversight as we're managing the majority of their investments, and maybe there's a little bit of money managed away from our firm, and really helping them to understand and help to drive the investment strategy of the organization in a much more holistic fashion. When we're working with larger organizations, there's different ways that we're engaged as well. Sometimes it might be where we're managing one specific strategy for them, and they maybe have views and maybe are looking for our ideas on views that they already have as a sounding board, or they still might be engaging with us from a very holistic fashion. And that presents a unique opportunity where we might be sitting in meetings, and we're not just interacting with maybe a finance team or the management or the executive team, but we might also be working across people who are sitting in ALM functions, people who are sitting in capital functions, because the investment decisions that firms face continue to get larger and more complex from the needs as organizations tend to get larger and you have more stakeholders involved. So it's really interesting and provides, I think, just a really fertile learning ground for us as professionals.
Right. And despite the fact that the approaches are different in terms of how you're thinking about their challenges and the way that they're looking to sort of invest or have you step in as a CIO. Have you noticed in these conversations any broader macro trends that your clients are currently concerned about? Whether it's, I don't know, interest rates as an example, or geopolitics. I mean, I'm just throwing out a few things that we've noticed or that we think about when we think about sort of credit and its impact sort of across all industries. But specific to insurance, what's the word on the street? What's going on?
Yeah, I think one of the interesting things is, you go to conferences for insurers and you often are hearing a lot about, the geopolitical. You're hearing a lot about the typical things that you might see when you flip on CNBC or Bloomberg on any given day in terms of what's in the headlines. But
Yeah.
really, as a long-term asset owner, most of them at the end of the day, we do find to be, those conversations and decisions tend to be a little bit more tactical in terms of their
Mhm.
impact on the portfolio as opposed to, moving the overall portfolio. So I think that some of the concerns that you typically see within the insurer base in terms of how it's impacting the business tend to be some of those bigger, secular trends and challenges. And so, um, I'll use inflation as an example. That was a really interesting use case, and obviously it's tied to the impact on interest rates that we've seen over the past few
Mhm.
years. But that was something that for some insurers was really not just pushing interest rates higher and devaluing their bond portfolio, but it could also mean that they had to be increasing their expenses as a business, and they could be having to pay out higher claims as well on property risks that they might have underwritten. So that's a real double-edged sword, particularly when you start to talk about the property and casualty industry in particular. The other one that I think is really closely related is interest rates. And within interest rates, it's been a much more volatile period, and there's been a lot more uncertainty around that trend compared to what we've seen over the past, couple decades leading up to maybe just a couple of years ago. And so I think there's this question about how persistent interest rates are going to be at a maybe higher level and the overall path. Um, but what we've seen is that insurers are still much more thinking about those investment impacts, I think, in terms of a longer term view. But tactically, there's definitely been some consideration in terms of modestly extending duration in portfolios. There's been considerations on, um, if a company's maybe been a little bit shorter their duration target, or shorter their liabilities, or maybe has been adding a lot of floating rate assets to their portfolio, maybe looking at extending duration out a little bit longer.
Okay, got it. Yeah, I mean, I think that's all to your point. It's you can always see the headlines and there's, sort of the obvious sort of what's going on, what's everyone talking about, but it's always interesting to hear kind of when you're sitting in a room talking to somebody kind of what's actually top of mind for them based on what they're experiencing a bit more directly. So that was some good insights for me. Now, I'd be curious from Conning's perspective, what are some areas of risk, sort of given the current environment, where you all see a potential opportunity for your clients and for the insurance industry, but also just for yourselves? And that might even apply outside of the space that you work in directly. I mean, I'm sure your colleagues, the firm overall is doing a lot more outside of insurance. So what are some thoughts around that?
Yeah, I think one of the areas, we've talked about interest rates a little bit, so I'll skip over that. I think in terms of potential for opportunity is it's really also a challenge. Is we're a very client centric organization. So we have a client service model that is built, and clients have touch points that reside across multiple parts of our organization, as opposed to maybe other firms where they might have one person that they can reach into. At Conning, I think we've built a model that really serves the need of insurers, and we have a lot of access and availability. And a part of that is that insurers just continue to have enhanced needs from a variety of stakeholders. So as you think
Mhm.
about the regulatory environment as an example, um, that landscape is continually evolving. And as a firm that is plugged in across the insurance ecosystem, at Conning, we have people who follow inside of our accounting team how policy is changing from the NAIC. We have people in our insurance research team who are researching trends inside of industry. You have my team who are focused. And really, a lot of our firm is just focused on serving the needs of insurance companies. We're a great resource, and we have to continue to evolve our service model to help meet companies. And so I think a question that I have is how do we continue to deliver the best possible, product for clients.
Hmm.
Outside of that, another area that we've really seen, and this really goes with some of those secular trends in terms of how we've seen insurers growing and changing their asset allocation, is looking at opportunities to continue to expand the tools that we're able to bring to help solve insurers' investment challenges. And so, over the past several years, we've engaged in inorganic and organic growth opportunities through mergers and acquisitions to really expand our investment offering that we're able to utilize, and hopefully to do so in a way that makes sense for insurers, while at the same time making sense for us as a business too. So diversifying our revenue stream as an organization obviously is something that makes a lot of sense for us. Um, so I
Yeah.
think those are a couple different ways, and I think we'll continue to look to invest in new capabilities, new opportunities to really help think about how to bring thoughtful and world class investment capabilities to bear for institutions globally.
Right. Because at the end of the day, I think it's one thing to support the profitability, but you also want to sustain that for your clients. I'm assuming that's sort of what's top of mind, right? That alongside growth. Um, so switching gears a little bit, there's been a lot of conversation across all industries, whether it's energy, sustainability, banking, insurance, around tech and AI and cybersecurity, sort of everything within or under that technology umbrella. How does that fit into the work that you're doing at Conning?
So I think that technology is definitely a key component, and I think this gets into that service model and how do you make sure that you're delivering the best for our client base. And so, if I think about technology just at its core, it's how do you do things more efficiently, right? And software and different technological tools are different ways to achieve those outcomes. Um, but I think for us, as our clients' needs continue to evolve, applying technology in a thoughtful manner is a key way in doing that. And so we're constantly looking at the tools that we have in place, and we're constantly investing in how to best provide those tools in a systematic and scalable way to clients. Now, the areas of AI over the past 2 years have been an area that not just is the investment management industry talking about, but also broader financial services and insurance companies are among those as well. We've been trying to partner with our clients and understand not just how we can apply those technologies to help drive the deliverables that we're giving them, but also through some of the work that our insurance research team is doing to engage and help the broader industry to understand how some of their competitors are applying those types of technologies to their business. So I think the insurance industry is something that is constantly evolving in terms of the technology that you've seen applied. I mean, earlier, in the past decade, you saw a lot of fintech investment and the insurtech rise. Names like Lemonade, Hippo, Policy Genius on the distribution side, um, and
Yep.
it there seems to be a renewed focus on that in terms of how companies can apply it and really get the most to deliver at the end of the day, not just from a profitability standpoint, but for their policyholders to be able to access their products as well as possible.
Yeah, definitely. And I think with technology, it's one of those areas where if you don't stay on top of it, you end up sort of falling behind from just a competitive standpoint. So that's
Yeah.
awesome.
And I mean, I look at some of the work that our team is doing and partnering with our firms across the group. We have applications that, as a team, a couple years ago, we were running on desktops that now we're running like in a cloud universe, and that's allowed for us to shift from server spend to now grid spend through a partner and web services, um, while at the same time being efficient and maybe being a little bit quicker and being able to access compute, and more versatility with that compute in a better manner.
Right. I mean, I think being able to make business decisions faster and in a more informed manner also allows you to scale your business. I'm assuming at a quicker pace. Um,
Yeah. Yeah, and I mean, there's a lot of parts of our business. Everybody thinks of investment management like we have a lot of resources that are dedicated to scoping out the investment universe. We have our to find good opportunities across different sectors. We have our trade desk who's constantly looking for good relative value or trying to execute it as well as possible. Um, but then there's also aspects of the business that are client reporting or client communications
yeah,
and business development. And those same sorts of technologies can add value in the organization in those ways and help to make people more efficient.
yeah. No, I completely agree. Um, so as we sort of close this out, Matt, a question that I would like to end this on is if you weren't the head of insurance solutions for conning, what would be the dream job?
Oh, wow.
I was
Yeah,
surprised.
that's a good question. So I'd have to go. I mean, so now I'm at a different point in life than I was when I was considering this, and so now I have a family and kids, and so I can't take on the volatility. But there's an alternative universe where I think I take some of the same skills and interest in quantitative and problem solving, and I would have loved to say that I would have applied them towards like a future in sports. So I'm very interested. I was a very early reader of Moneyball and Michael Lewis's story with regards to that
Yep.
sports analytics,
Yep.
and some of those types of stories are very interesting to me. It was actually I had a conversation at an early age with the general manager of the Minnesota Twins, who, when I expressed that interest to him, as they had a farm team that was in a town over from me, and he just happened to be there, and we had a conversation, and he was the one who encouraged me to add on to my economics and mathematics background some computer science courses, as he saw that as a way to really continue to jumpstart, and that technology was going to be a critically important vector in terms of success, whether it be in sports or in other fields. Um, so I think there's an alternative universe in which I'm doing that, and maybe I'm somebody in a sports team, and making that decisions around that. But
Yeah. I mean, who knows? Life's a long journey. If not now, could be 10 years, 20 years from now. But
yeah, or maybe I do well enough in finance and investments where eventually I can just own a sports team like some
there
other
we go.
people, right?
There we go. Why, yeah, why stop at, that level when you can just aim higher? We love that. But anyway, Matt, thank you so much for joining us today. I really enjoyed our conversation. It was interesting to learn, sort of generally about Conning's business model, how you guys are thinking about risk and growing and staying on top of it. And yeah, I really look forward to speaking with you again sometime soon. And thanks again for joining us today.
Yeah, thank you so much for having us. I've enjoyed this conversation.